The world was stunned, and for good reason. In a moment that no one could have predicted, headlines flashed across screens and conversations erupted in living rooms, offices and online forums everywhere. The news was both unexpected and unprecedented, leaving many to question if they had heard correctly or if it was some kind of elaborate hoax. The Philippines, a nation more often associated with receiving international assistance, had just extended a $250 million loan to the European Union. This was a complete reversal of the usual aid dynamic, flipping the script on decades of global financial relationships. The move sent shockwaves through the international community as analysts scrambled to make sense of what this meant for the balance of power and the future of global economics. Traditionally, the Philippines has been seen as a recipient of international aid, relying on support from wealthier nations and global institutions. But now, the country is stepping confidently into the role of lender, signaling a dramatic shift in global economic relationships. This bold move is not just about money, it's about changing perceptions, asserting new influence, and demonstrating that the global order is not as fixed as many once believed. The European Union, long considered a pillar of economic stability, now finds itself in an unfamiliar position. Facing budget constraints, internal disagreements, and mounting geopolitical tensions, the EU has had to accept help from an unexpected partner. This development has raised eyebrows and sparked intense debate within European capitals, as leaders grapple with the implications of relying on external support. This move challenges long-held notions of economic hierarchy and global influence. Experts and commentators are now questioning what motivated the Philippines to make such a bold offer, and what the EU's acceptance says about the current state of the world. Is this a sign of a new era in international relations or simply a pragmatic response to a temporary crisis? The debate is fierce, and opinions are divided. Some observers see this as the Philippines boldly asserting its growing influence on the world stage, eager to prove its capabilities and reshape its image. Others argue that it's a practical, calculated response to the interconnected challenges of today's global economy. Either way, the decision has sparked conversations about national identity, economic strategy, and the shifting tides of international cooperation. As we explore this remarkable development, we'll delve into its historical context, examine its current significance, and consider the potential impacts for both the Philippines and the European Union. What does this mean for the future of global finance? How might it reshape alliances and economic strategies? Join us as we unpack the story behind this surprising turn of events. To grasp the loan's significance, we must look at the history between the Philippines and the EU. The Philippines, once a Spanish colony, has long had cultural ties to Europe, but economic relations have mostly involved the EU providing aid. Recent years have seen the Philippines' economy grow, driven by services, remittances, and outsourcing. This growth has enabled the Philippines to engage in international finance on more equal terms. The loan marks a turning point, reflecting newfound confidence and a desire for a more active global role. It could signal a new era of mutual cooperation, with both sides benefiting from a more balanced partnership. In a move that has captured the attention of both local and international observers, the Philippine government has announced a significant financial initiative. The $250 million loan, a substantial sum by any measure, was officially revealed to the public in a well-attended press conference, signaling the start of a new chapter in the country's economic diplomacy. The announcement took place on January 10, 2026, at the headquarters of the Philippine Department of Finance in Manila. The event was marked by a sense of anticipation, as government officials, members of the press, and representatives from various sectors gathered to witness the unveiling of this major financial agreement. The official press release highlighted the government's commitment to fostering international partnerships and supporting global economic stability. Secretary Maria Lopez, the country's finance chief, took center stage during the announcement. In her speech, she described the loan as a strategic move designed not only to strengthen the Philippines' relationship with the European Union, but also to demonstrate the nation's willingness to play a proactive role in supporting the EU's economic resilience. Lopez emphasized that this partnership is built on mutual trust, shared values, and a vision for a more interconnected global economy. The terms of the loan are particularly noteworthy. Featuring a low interest rate and flexible repayment options, the agreement is tailored to provide the European Union with the financial breathing room it needs to address ongoing economic challenges. According to officials, these favorable terms reflect the Philippines' confidence in the EU's ability to recover and thrive, while also ensuring that the partnership remains sustainable for both parties in the long run. The formal signing ceremony held in Manila was attended by high-ranking officials from both the Philippines and the European Union. The atmosphere was one of optimism and mutual respect, as representatives exchanged documents and reaffirmed their commitment to working together. EU officials expressed deep gratitude for the support, highlighting the importance of global cooperation in times of uncertainty and change. However, the agreement has not been without controversy. Some critics have voiced concerns about whether the Philippines should be extending such significant financial support abroad, especially when there are pressing domestic needs that require attention. They argue that resources might be better allocated to local development projects, healthcare, or education. On the other hand, supporters of the loan see it as a forward-thinking investment in international relations, one that could yield long-term benefits for the country's global standing and economic prospects. The announcement has sparked lively debate among policymakers, economists, and analysts. Roundtable discussions and panel debates have emerged across media platforms, with experts weighing the potential risks and rewards of this bold financial move. Some see it as a testament to the Philippines' growing influence on the world stage, while others urge caution and a careful assessment of the long-term implications. As more details about the agreement continue to emerge, the world is watching closely. The partnership between the Philippines and the European Union is being followed by international media, with headlines highlighting its potential to reshape economic alliances and foster greater cooperation. Only time will tell how this ambitious initiative will unfold, but for now, it stands as a powerful example of diplomacy, vision, and the pursuit of shared prosperity. The Philippines' loan to the EU marks a dramatic shift in global financial dynamics. Instead of aid flowing from rich to developing nations, the Philippines now positions itself as a credible lender. This move could boost the Philippines' reputation in global markets and attract new investment. For the EU, the loan offers timely support amid economic uncertainty and highlights the need for diverse partnerships. The event underscores the interconnectedness of today's economy, where financial decisions have global ripple effects. As developing nations take on bigger roles, the traditional economic order is being redefined. This new landscape brings both challenges and opportunities for all involved. Politically, the loan could reshape alliances and diplomatic relationships. The Philippines emerges as a more influential player, willing to engage beyond its traditional partners. The EU's acceptance of the loan signals openness to new alliances in a multipolar world. In the Philippines, the move sparks debate over foreign policy priorities and resource allocation. The loan may also affect regional dynamics, as the Philippines asserts itself as a leader in Southeast Asia. As global power structures shift, nations must carefully balance national interests with international responsibilities. The loan's social impact is felt on both sides of the globe. In the Philippines, some worry the funds could have addressed domestic needs, while others see long-term benefits from stronger EU ties. Increased trade and investment could create jobs and improve living standards. In Europe, the loan is a symbol of solidarity and the value of international cooperation. It encourages both regions to explore new partnerships for mutual benefit. Ultimately, the move highlights the importance of global citizenship and shared progress. The Philippines' loan to the EU signals a new era of international cooperation. It challenges old ideas about economic power, emphasizing partnership over hierarchy. As emerging economies step up, global collaboration becomes more balanced and inclusive. The loan demonstrates how interconnected the world has become. Financial decisions in one region can affect many others. This shift opens doors for more equitable partnerships and shared solutions to global challenges. The possibilities for collective progress are greater than ever. To truly grasp the far-reaching implications of this landmark loan, we turn to a panel of leading experts who have been closely monitoring the situation. Their analysis sheds light not only on the immediate financial impact, but also on the broader economic and political landscape that this move is set to influence. By examining the motivations behind the loan and the potential ripple effects, we can better understand what this means for the Philippines and its place on the global stage. Economist Dr. Elena Ramirez, a respected voice in international finance, describes the loan as a strategic maneuver that signals the Philippines' growing confidence and ambition. According to Dr. Ramirez, this decision is not just about securing funds for development. It's about sending a message to the world that the country is ready to take on a more prominent role in regional and global affairs. This isn't just financial support, it's a statement of intent, she explains. Dr. Ramirez points out that by accepting this loan, the Philippines is demonstrating its willingness to engage with new partners and diversify its economic relationships, which could open doors to future collaborations and investments. Political analyst Dr. Mark Thompson adds another layer to the discussion, noting the significant geopolitical shift that this move represents. He observes that the Philippines is actively seeking to balance its traditional alliances with new partnerships, particularly with the European Union, which could reshape the country's diplomatic and economic trajectory for years to come. Both Dr. Ramirez and Dr. Thompson agree that the loan has the potential to bring substantial long-term benefits. These could include increased trade, greater access to European markets, and the strengthening of diplomatic ties that may lead to more robust cooperation in areas such as technology, education, and infrastructure development. However, they also caution that the path forward is not without challenges. Effective management and transparent governance will be crucial to ensure that the loan is used wisely and that its benefits are distributed equitably across society. Without careful oversight, there is a risk that the opportunity could be squandered or lead to unintended consequences. Their insights highlight the intricate nature of international finance, where every decision can have complex and far-reaching effects. Strategic decision-making, informed by expert analysis and a clear vision for the future, will be essential for the Philippines to maximize the advantages of this unprecedented move. As policymakers debate the next steps, they must carefully weigh both the risks and the opportunities that come with this bold gesture. The world will be watching to see how the Philippines navigates this new chapter and whether it can turn this moment into a lasting legacy of progress and partnership. The Philippines' loan to the EU is a milestone in international finance, challenging old power dynamics. It underscores the value of mutual support and the need for countries to work together on global challenges. As emerging economies take on bigger roles, new opportunities for partnership and progress arise. This development reminds us of our interconnected world and the far-reaching impact of financial decisions. By embracing diverse partnerships, nations can drive positive change and build a more equitable future. The path forward is one of collaboration, where the benefits of cooperation are shared by all.